Hyperscale data, ticker symbol GPUS, is getting even bigger into crypto, while it still looks for growth in offering high-performance computing and data center services. It recently finalized an order for 2,000 Bitmain S21 Pro Bitcoin miners, adding to the 2,099 S21 Plus miners it previously acquired. This brings Hyperscale's total new mining equipment to 4,099 units, which is expected to double its current Bitcoin production at its Michigan data center. The new S21 Pro miners will replace older S19J Pro units and operate alongside planned NVIDIA-powered AI clusters, enhancing the efficiency of the facility's dual-purpose operations. This move is in line with Hyperscale's ongoing strategy of growing its digital asset holdings, with a target of accumulating $100 million in Bitcoin. On the road to this goal, it began November, with its Bitcoin treasury surpassing $70 million in value, which represents about 61% of its market capitalization. This includes 234.7 BTC, with 40.2 BTC from mining operations, and 194.5 BTC purchased from the open market. Moving ahead, $47.5 million in cash has been set aside to continue purchasing Bitcoin using a dollar-cost averaging approach. Holdings will increase through weekly purchases, which will accompany regular updates on its progress toward its $100 million goal. At the same time, Hyperscale's subsidiary Centenum operates the Michigan Data Center, where it combines AI and digital asset infrastructure, positioning itself for further growth in both sectors. On the security side, AXON reported strong Q3 results, with revenue of $710.6 million, a 30.6% increase year-over-year, beating analyst expectations of $705.2 million. While adjusted EBITDA for the quarter was $177 million, surpassing analyst estimates and reflecting a solid 24.9% margin. AXON maintained a strong cash position of $2.4 billion, with net cash increasing by $290 million. Notably, AXON's software and services revenue grew 41% year-over-year to $305 million, with annual recurring revenue reaching $1.3 billion. Connected devices revenue also rose 24%, driven by demand for Taser products and body cameras. AXON continues to invest in expanding its product ecosystem, including the launch of AXON 911, a next-gen platform integrating AI for emergency response, and the introduction of the AXON Body Workforce Mini for enterprise markets. AXON also announced the acquisition of Carbine, a cloud-native emergency communications platform, for $625 million. This acquisition aims to modernize 911 systems and integrate AXON's connected devices and real-time data to improve emergency response times and outcomes. Similarly, Rivian posted better-than-expected Q3 results, with a smaller-than-anticipated loss of 65 cents per share, beating analyst estimates of a 74-cent loss. Revenue surged 78% year-over-year to $1.56 billion, exceeding the consensus estimate of $1.52 billion. While vehicle deliveries during the quarter hit its highest for the year at 13,201. Despite the positive financials, Rivian lowered its annual delivery forecast to 41,500 to 43,500 units due to uncertainties around demand after the expiration of a $7,500 federal tax incentive for EVs and rising tariff costs. CEO RJ Scaringe acknowledged a pull forward in demand before the incentive expired, but remained optimistic about future prospects, maintaining the company's vehicle production and R2 SUV launch plans. Headwinds also come in the form of a 4.5% workforce reduction of over 600 employees as it adapted to softening demand. However, Rivian's software and services segment continued to support profitability with higher margins. In addition to its core business, Rivian announced the creation of a new spin-off company, Mind Robotics, focusing on industrial AI and robotics. The new venture aims to enhance Rivian's manufacturing efficiency and operate as a data-driven AI company in the robotics space. So far, Rivian has secured $110 million in external seed capital for the venture. As for environmental improvement, Aduro Clean Technologies provided an update on the commissioning progress of its next-generation process, NGP pilot plant in London, Ontario. The plant is advancing on schedule, moving from Phase 1, assembly and installation, to Phase 2, testing and process tuning. All major components, including the extruder, process skids, and automation systems, have been successfully installed. The extruder passed its site acceptance test, and the process skids completed factory acceptance testing. Commissioning activities now focus on system validation, operator training, and tuning the plant for continuous operation. The NGP pilot plant is crucial for validating Aduro's hydrochemolytic technology and will provide data on feedstock performance, energy balances, and product quality. This data will support the design of a larger demonstration plant with an 8,000-ton annual capacity, along with the help of partners Zeton Inc. and Siemens Canada, to integrate and fine-tune the plant's systems. Additionally, Aduro has announced the start of engineering trials for its demonstration plant in collaboration with Krauss-Maffei Extrusion, GmbH, and Chill BV. These trials will evaluate how extrusion systems handle contaminated waste plastics, aiming to optimize feed quality for the hydrochemolytic process. The trials will provide critical data for designing the demonstration plant's pretreatment and extrusion systems, reducing the need for costly pretreatment while ensuring effective processing. As it continues, this structured approach to technology scale-up, with a focus on data-driven decision-making for equipment selection, pretreatment strategies, and integration, Aduro is looking to finalize long lead equipment procurement by Q4 2025. For more on stocks and crypto, follow Ascencore. See you next time.